Tesla stock hit an all-time high level on Wednesday for the first time ever, and in my $5.9 million portfolio, I just sold 14% of my long-term Tesla shares with an over 136% gains. Why did I sell Tesla stocks now? Why am I keeping 86% of my remaining shares? Am I planning to buy back in as a long-term value investor? Here is my Tesla stock investment strategy and why. I'm Kenna Danielle, the Invest Diva, former electrical engineer, current eight-figure investor, here to help you accelerate your financial freedom. I have been investing in Tesla stocks since 2015. However, my strategy for Tesla has been different than that of my many other tech stocks such as Nvidia, Meta, or Alphabet. I create my investment strategies based on the 5 points of the Invest Diva Diamond analysis. This includes capital, intentional, fundamental, sentimental, and technical analysis. This is exactly how I grew my portfolio from $500 per month to over $5 million in less than a decade. So let's get to Tesla stock fundamental analysis. In April 2014, Tesla dropped the prices of its new vehicles, which basically eliminated their profit margin. To many investors, this appeared to be an odd move. Has Tesla gone too far? Is it going to be out of business? How would Tesla remain in business? Is this a dumb move or Elon has something else in mind? For one, this has been putting pressure on all of their competitors to drop the prices of their EVs. And what many investors forget about is that Tesla's secret weapon is selling software. Full autonomy is $10,000 pure profit, and other over-the-air software upgrades will come in the future. They could even sell it as a monthly subscription, and this is something that Tesla's competition do not have the infrastructure to compete with Tesla on, because if they choose to continue to compete with Tesla on price, they will hurt their profit margin. To me, Tesla has always been more than a car company. It is rather an ideology led by a charismatic and often problematic leader, Elon Musk. The vehicle is a way to sell software. Tesla is the iPhone of cars, and eventually Elon Musk may even start bringing on apps to compound on his monthly subscription basis. Elon Musk has been very successful at creating a unique infrastructure needed for EVs to become mainstream in the US, something its peers have not been able to come even close to. But Musk has his own personal agenda when it comes to his leadership, which doesn't always match the shareholders' expectations for stability. For that reason, every time Elon has had a change of heart in his focus, whether it's in his many companies or political beliefs, we see a fluctuation reflected on the Tesla stock price. The most recent boom came after Elon Musk switched from his Democratic base to helping Republican presidential nominee Donald Trump win the US elections. In my opinion, his hidden agenda was to get Republicans who didn't believe in climate change to buy his electric cars. And if that's truly the case, that makes him a marketing genius. And you could see why he just became the first person in the history with a $400 billion net worth. The next point of my Invested by Diamond analysis is sentimental analysis. So let's get into it. After Trump won the 2024 US elections, Tesla stock was one of the more obvious winners as Elon Musk started spending almost every day with the president-elect. This got Wall Street excited about the future of Tesla because now Elon could have an influence on many government contracts, including Lockheed Martin, and put his companies like SpaceX ahead in the competition. However, to me, this is merely a buy the rumor phenomena, as Trump has yet to take office. Such phenomena is typically followed by a sell the news sell-off, which could potentially happen later in 2025. This brings us to the technical point of my Invested by Diamond analysis. When conducting an investment strategy, I not only look at the fundamentals and market sentiment, but I also look at the asset's unique characteristics when it comes to price action. Tesla has long been a ranging growth stock, as you can see here. These are all Tesla's old price ranges. What does that mean? That means that Tesla stock typically moves upward for a year or so, then finds a new range for a couple of years until it finds a new high and moves in that direction again for another couple of years. Then it finds a new high and repeats that pattern again till it finds a new high. On the daily chart here, as you can see, Tesla successfully formed an angled double bottom chart pattern over here. And the neckline here at 293 was broken in November, literally right after the US elections. This officially ended the bear market that started back in 2022. On the weekly chart, we also had a confirmation of a break above the Ichimoku cloud here, which is one of my favorite indicators. And today on Wednesday, Tesla officially hit an all-time high of 418. Tesla could now be looking for its new all-time high level that could potentially fall on any of these key resistance levels based on Fibonacci retracement levels. So why did I sell and why did I start taking partial profits from the Tesla stock lots that I purchased back in 2021? Here is my Tesla stock profit taking strategy. Reminding you, this is not financial advice and results will vary. I set two sell-in orders after the November elections at 366 and 399 respectively. The latter was filled on December 10th, 2024. I only sold long-term lots that I have been holding on to for over a year. This strategy reduces my capital gain taxes liability. I am selling because the gains have satisfied the investment strategy that I set out when I entered these positions 2 to 3 years ago. In my main stock portfolio, while I do hold my top 10 holdings long term without selling, I do take partial profits from the stocks that have a more cyclical nature, like Tesla stock. I still own 346 shares of Tesla stock, and I plan to sell some of them at these resistance levels, respectively. I also think that Elon could have a falling out with Trump in 2025, and we could see any of these lower levels revisited, which is when I'm planning to buy back in. These were all part of my triple compounding method that allowed me to go from living paycheck to paycheck to building a $5 million stock portfolio together with a $15 million net worth. If you want to learn the exact steps that I take, hit the subscribe button and check out the link here or here or here to attend my next triple compounding live virtual event. Thank you so much for watching.